Well, the Seriti Global Equity Fund spans 99 countries. In the hot seat today, we have Tshepo Modiba. He's the head of equities at Seriti Asset Management for a look at the fund. 99 countries, if you could put that into perspective for us, Tshepo.
Look, so it's not quite that we're currently invested in 99 countries or we will ever be invested in 99 countries, but we look for opportunities across 99 regions, including Kazakhstan. I can thankfully say there's not much opportunities right now, but from a market as small as that to as large as the US, because in our view, as an investor, you want to look for opportunities in as many places as you can find.
Tshepo, so you've got 99 countries that you can look at. Are you doing it from a geographical perspective, or are you going to a country and you say, right, this country is growing at 7.3% GDP a year compared to South Africa's 1.8%, so let's have a look there, but we're not just going to invest in that country because of its GDP or because of its political stability. You're going to look at the valuations of the companies.
Look, ultimately our starting point is looking at the valuations of the market itself. What we're guided by is if the market looks attractive, then we're probably likely to find companies within that market that are attractive themselves. So that's the starting point, and really attractive is in many guises. Firstly, valuations, but also I think liquidity and economic momentum are important from a drive of returns long-term internationally.
Tshepo, just to ask a question there on your choice of companies in which you may be investing, and you said Kazakhstan. Well, fortunately you're not there, which is just as well, because let's face it, political risk there is pretty high, and in the whole region as well. But in any case, you can't do an analysis on 99 countries or any great number of countries, but do you then take the credit ratings agencies as a starting point? Where is your starting point, and how do you recognize a company about which we in South Africa may know little?
Look, I think ultimately when you're running a global equity fund where you probably have 40,000 stocks to pick from, and in the countries that you like, you're probably looking at a couple thousand businesses. What you have to do is have some sort of filter, and really what we filter by is both valuations and some sort of quality factors. So return on capital is one of the factors that we look at to narrow the universe into something that's a little bit more manageable. I know a lot of people think I don't have a life, but I can't look at thousands of businesses over a year. I think Warren Buffett, he looks at 300 odd annual reports a year, so we try and manage the process down to a smaller universe like that.
So you have a model through which you could just filter all the basic metrics and hope it pumps out something that says, here's a red flag, let's look at it.
Yeah, it's when you have to use some sort of quantitative measure of objectively finding opportunities.
You do that yourself, you don't farm it out?
No, not at all.
That's impressive.
He works hard, quite clearly. But Tshepo, what about these new developing sectors? We have Tencent in China, which is doing wonders for Naspers as well as hurting it at the same time. But also Alibaba and the likes of Candy Crush listing. Is tech probably the new place to look at when investing globally?
It may be if it wasn't so expensive right now. Look, I think it's the obvious place to start looking at. It's very exciting to read about the stuff that Alibaba and Tencent and Facebook are doing, including buying WhatsApp and hearing the different opinions thereof. But ultimately what matters from an investment perspective isn't the story, but how that story relates to the numbers and how much of those numbers are priced in. So whilst we're actually quite excited about the business prospects for a lot of these businesses, we think a lot of that is in the price.
Tshepo, let me put on my Bronwyn Nielsen hat now. Let's cut all the slush now and get through all the clutter. Where are you invested?
Look, I think you'd be naive to not be invested in the US at all. It constitutes, I think, half of whatever benchmark you look at from an international perspective. So we do have holdings in the US. Some may disagree with some of our holdings. JP Morgan is one of them, right at the top. But actually from a stock market perspective and an operational perspective, that's done fairly well. So whilst we are bullish on some segments of the US, we think the markets run quite a bit overall. And if I look at earnings perspective, I'm a little nervous about where earnings are going to go given how strong the dollar is, and I think the numbers 40% of earnings come from outside of the US. So if I'm looking at earnings in dollar basis, and a strong dollar will have a big detractor on earnings. And we also know that productivity gains over the last few years have been really given to companies as opposed to labor. So from a US perspective, we're slightly underweight. Fairly bullish on Europe, but it depends where on Europe again. And fairly bullish on emerging markets, not across the board. So places like Turkey make me nervous right now, given the political uncertainty there. Brazil's quite interesting, and China and Hong Kong in particular.
Tshepo, the average South African investor was highly likely to play in the big boys clubs, you know, the Cannon Asset Managers as well as Coronation and Alan Gray, when they want global exposure. What are you doing to attract that market?
Look, for the time being, we are staying to the institutional space. We will eventually roll out into the retail offering. The truth is, very few managers run global money from South Africa, so it's actually quite a nice place to be able to compete even with the bigger guys. It does help to have maybe a decent track record on the back of that, and that's really how we go about selling ourselves. It's what we've done in the past and what our investment process and philosophy is.
What sort of size is the fund at the moment, and how has that changed from, say, a year ago?
Look, a year ago that didn't exist. So in the scheme of things, it's relatively small compared to our peers. But we are gaining traction in terms of investor appetite.
Tshepo, you've got 99 countries that you have potential to invest in. You've whittled that down probably to around about 27 because you know, you've got a life as well, even though some people claim that you don't. When you get down to the countries, what sectors do you like? What industry sectors? When you look at Africa, is it FMCG? Is it consumerism that you're focused on? Is it telecommunications? Is it agriculture? Is it energy? And in other countries, is it country dependent?
I think it's very country dependent. As an example, I think there's certain sectors in the US, the defensives that are quite expensive right now, whereas banking is actually quite attractive there. And given how the banks in the US are relatively well capitalized compared to Europe, that's probably where where we are looking at right now. Whereas in emerging markets, given how negative the sentiment has been, the consumer-related companies are the ones where we are looking and finding quite a bit of opportunities right now.
More importantly, where you're not looking, Tshepo?
Social media. That's an obvious answer. I'm still particularly nervous about European banking. Whilst I think they've done a lot to solve the crisis, I think there's still a lot of risks under the table there, so it's one area that I'm particularly nervous about.
Yeah, and I'm not too sure if you're impressed. You've been in the game for quite a long time. Is Tshepo talking you up?
I think he's very brave. To sum it up like that, to take on the world. Wow. But no, it needs to be done, and if you don't have too big a commitment of your own funds, and your investors only have a certain portion of their funds, then okay, that risk is taken into account. Of course it's a high risk area, but that's part of the attraction.
Look, I mean, ultimately where we are is investors typically need some sort of diversification, not just from an allocation perspective on a global perspective, but a lot of investors have a big allocation to the bigger managers in the country. So a lot of people will have Coronation and Alan Gray, as Gugu touched on. So I think what we present is a nice diversification, not just because we are looking overseas, but also from some of the bigger players in the country.
Tshepo, what about this one? I was lucky enough to host, I was privileged enough to host an award ceremony for the financial services industry a few weeks ago, and I got to the Global Equity Fund thing, and I opened up the envelope and I looked at this and I thought, wait a second, 15.6%, 17.2%, 14.8%. The S&P returned 30% last year. I could have just bought the thing on January the 1st, taken my 30%. I didn't need any fund managers. My fees would have been low. What I'm saying is, do you say to yourself, well, I still like the United States of America. I still like the composition of the S&P. Let me buy an S&P ETF and do some stock picking outside. In other words, is there any sort of ETF or other product that you incorporate into this fund?
Fortunately, I think I've got a big big enough ego that I think I can pick the right businesses within the US. So whilst I think the S&P did phenomenally well, if you got your stock picks right within the S&P, you did even better. But it's not just the case. I think the temptation is to look at what the US has done, or what Japan has done, or what Europe has done, and formulate that as your global view. The truth is you're offered a lot more room than that.